Hey guys, Elliot Lockwood here on behalf of Phantom Trading. Um, Wanted to talk to you guys a little bit about this idea of earning a passive income through trading or investing. Okay, so if you're like most people, you've heard of sort of this meteoric rise of Bitcoin and all the money that people have made in Bitcoin. You've heard about the tremendous rise in the stock market and the huge percentage gains that have been made there. And you want to kind of get in on this action, okay? Maybe you also are aware of things like pension funds and retirement accounts and stuff like that that traditionally have been provided to you by your employers or your government are no longer really fulfilling their end of that deal. And so you might be thinking it's about time to take things into your own hands. Okay, so before we get into any specifics on the actual practical application of trading and investing, I want to give you a little bit of my backstory and how I got started in all of this. Okay, so back before Bitcoin was even conceived, if you will, I started looking into this idea of supplementing my regular income with a passive income stream or multiple passive income streams, just initially with the hope of just kind of padding my regular income and having a little bit extra money, and sort of being able to um, build up both a savings account and have a little extra spending money, and what have you. And then from there, uh, the thought process that I had was sort of, well, if I can get this passive income stream, okay, and I can build that up to a certain point, a goal, let's say, of 10% of my actual income, and I can achieve that, then what's next? If I can get 10%, who's to say I can't get 20%? What are the steps to get there? Okay, so this is kind of the process that I went through, and eventually reached a point to where I was able to transcend having to actually supplement my income with passive income and replace my standard income with passive income. Okay, and so the way that I did that was again just doing what you're probably doing, right? Is looking into these ways of investing. Okay, and what I came across were sort of these pushes towards traditional investment approaches such as buy and hold, right? When most people think of investing in, say, the stock market or in anything, gold, they think of simply buying a stock or buying an index or buying gold and holding on to it in hopes that the price will increase, okay? And essentially tying your hands behind your back during a recession or hoping that a recession never occurs and hoping that over time your account balance simply grows and you don't have to worry so much about things like major market crashes. Well, things have changed. Okay, we are now deeply into the 20th century, and there are better ways to invest than simply buying and holding. Okay, or getting into pension funds and things like this. This is the old paradigm of investing and gaining a passive income. And frankly, it no longer is viable, in my opinion. Okay, so uh, what we're focusing on with this term trading, okay, is the idea that we're not simply buying something that we think has value and will therefore have further value in the future. We're actually capitalizing on the fluctuations of price, whether up or down, and coming up with a framework to encapsulate that particular movement, whether it's up or down or sideways for that matter, and come up with certain points in time where there is a higher probability of one direction occurring than the next. Okay, so if you look at any market, okay, we've got Bitcoin pulled up on this chart here. Okay, you can see the price at certain points is going down, at certain points it's going up, and so on and so forth. And you can pull up anything. Okay, if we pull up gold here, you see the same principle. This market isn't just going in one direction, it's going in every direction, up, down, and sideways. Okay, you can pull up other commodities such as oil. Okay, same thing. Going back to the title of this segment, how to make a passive income trading virtually anything, uh, your um, the analysis that we're going to be discussing here, and the analysis that I have formed my entire trading framework around, broadly applies to anything that has a market. Okay. So, I mean, soybeans, okay? Soybeans have a market. Soybeans go up, soybeans go down, and soybeans go to the side, right? This applies to currencies, okay, which is actually my particular expertise. I've been trading foreign exchange currencies for about 8 years. So since about when Bitcoin first started to um, come into existence, if you will, back before anyone knew what Bitcoin was, including myself, I've been trading currencies. And now that Bitcoin and altcoins and all these things are becoming tradable instruments and have become tradable instruments, they actually behave very similarly to foreign currencies, such as the euro, the yen, the Australian dollar, the US dollar, and so on and so forth, which only makes sense, right? Because at the end of the day, they are currencies. Um, but the point that I want to illustrate here by showing you these different charts is that if you are just buying, okay, you're just buying. Let's say we go back to Apple, since that's something that most people are going to be, whoops, uh, pretty familiar with, right? There are points in time where you have significant percentage drops, right? Where you don't have to simply weather those losses. You can actually turn that into a gain, okay? And again, if we go to gold, the same thing. What we're looking at doing as traders, instead of just buying something such as Apple or gold that we feel like will have an increase in value, we are actually looking to do things like find a probabilistic, deterministic, somewhat deterministic, based on probabilities, a one outcome being higher probability than the next. So it has nothing to do with our perception of value of gold or future value of gold. It has everything to do with a statistical framework, if you will, of one direction happening with a higher probability than another direction at a certain point in time for a certain length of time. For instance, we might have a probability up here that prices are not likely to go higher, but they are likely to, at least in the short term, fall and make this move, okay? And we can capture this move, and then conversely on these rises, okay? So that's the fundamental idea, is that we're not looking at picking something like Bitcoin, for instance, or any other security and saying, you know what, I think Bitcoin is the way of the future, and therefore I want to buy the thing, okay? It's all well and good to have opinions like that, but our goal is passive income. Our goal is to actually make money, whether we're in a recession or not, whether the price is rising or falling. And the way to do that is, again, to put yourself in a situation where you're only trading when you have an edge, right? When you have a probabilistic outcome of one thing happening over another outcome. So, how can you do this? Well, there are a million ways to skin a cat. But fundamentally, the correct way to really get started in any of this and to really kind of get your feet wet, if you will, is to come up with a framework to describe price action. Okay, and when I say price action, I simply mean the ebb and flow of a price chart of any security. Okay, those up movements and those down movements, those retracements, those swings, if you will. Okay, so what we're looking at here is a price chart. Okay, so you have a price chart for anything from the S&P 500 to individual companies within it, such as Google, Apple, IBM, so on and so forth. And just the same, you have price charts with things like Bitcoin. So let's go over just a little bit what these price charts actually are. Okay, so we won't go into extreme depth on this, but just so you have a basic understanding of what we're looking at here, this is called a candlestick chart. Okay, so a candlestick chart represents so basically each candle that you see, each one of these bars okay, represents a period of time. In this case, this is a daily chart. So each one of these bars represents the trading activity of one day, all right? So the movements in price up and down in one day. So we won't go into, again, the detail of kind of the anatomy of a candlestick with the wicks and with the candle bodies and the highs and the lows and the opens and closes and all these things. We want to just kind of to get started with giving a basic sort of framework of how you can read a price chart like a book. Okay, so what we're going to do is we're going to simply um, kind of encapsulate these price swings. Okay, so if you look, we've got these directional moves up. Okay, directional moves down, up, down, up, down, up, down. Okay, so all we're going to do right now is just encapsulate these sort of uh, price swings. Okay, so what I'm going to do is simply, if price is moving up, okay, like it is here, then I'm just going to select, kind of a point on the lows, all right, and then I'm going to go to another point on the lows and draw the line just beyond it that encapsulates all or virtually all of the price action on the bottom side. Okay, and then on the top side, all I'm going to do is copy this line and create what is called a channel. Okay, so we have an up channel here, okay, a long channel, and then we have a down channel here. Okay, so we can do the same thing on all these swings. Okay, so when price is moving down, we're going from one high point to another high point. Here's a reference point. Okay, this is what this is called, a reference point. And we'll just extend that line forward, and then we'll copy this and put it down on the lows to where it more or less encapsulates all the price behavior on the downside, okay, on the bottom side. Again, we have this price moving up here. So we're going to select the low point, and then here's our our reference point right there, and then we'll just extend this line beyond it, and then we will copy and encapsulate the high of the move right here, okay? And we can do the same thing with this move here, okay? Here's our reference point, and we're encapsulating all of this price action until it breaks out, okay? And we can go ahead and put this one on the bottom. Right about there would do the trick. Okay, so what this does, what we're looking at here is sort of channels that are encapsulating trends, okay? And you can see we have downtrends followed by uptrends, followed by downtrends, followed by uptrends, followed by downtrends, right? This is how the market works. It ebbs and flows. It goes in one direction and then it exhausts for a period of time, and then it moves in another direction, okay? And uh, without going into extreme depth of a particular trading strategy, you should be able to see how you can get an edge at certain points in time, okay? So if you did nothing else but identify these channels and then wait for price to uh, break out of the channel, okay, that's called a breakout. When price breaks out of a channel that's encapsulating price, you have an if then else statement that is saying if price breaks out of this directional channel, then it is likely to move in the opposite direction for some length of time, okay? So you have a probabilistic outcome of further prices to the long side once you break out of this down channel, which we do see here, okay? And then this channel is formed to the upside, okay, by having these 2 points of reference. If we were here in time, okay, we have our first point formed down here, obviously, and our second point formed there. And we know that we don't want to do anything except perhaps ride our long trade if we were in one through here until we break this channel line. And now we have a probabilistic outcome of prices falling for some length of time, okay, which happens here, all right? And then we get our high point reference here, and we're simply waiting for our next point of contact, okay? And we're to form this channel, okay? And once we have those two contact points, then we already have an idea of what we're doing. We're following the channel until price breaks out of it, and then we have a probabilistic outcome of the price going in the opposite direction. So it was going down. Now we can safely assume that price is going to move up. Okay, we form our 2 points of contact and we break through and we start forming another channel down. Now, as you can see, we have this down channel. Okay, we have our point of contact up here, point of contact here, and now what is price doing? It's breaking out of this channel with no further technical analysis, okay, with no fundamental analysis about what Bitcoin should do or would do or could do, just looking at a framework where we're identifying the behavior of price based on something that has some statistical relevance, such as this casual observation of what we just did. It's giving us a probabilistic outcome of prices being more likely to reverse the direction of the channel and go to the long side and start forming a new channel based off of this low point here, okay? We don't have a bottom point set yet, but we're forming a new channel in the direction to the long side, okay? So this is just a very basic primer on the types of discussion that we're going to get into in more depth. I'm going to kick out another video here in a couple of days where we can sort of validate these breakout points using simple methods to identify kind of the strength or the conviction that we might have on a breakout of these channels. For instance, is this a solid, high conviction breakout to the long side, or is it not? And do we need perhaps further confirmation? Okay, so we're going to get into this topic and more. Uh, if you tune in and wait for the next video, you will get some more tips on the direction that we're going with this and how you can actually apply this to earn a passive income with very little time spent. You can throw it on top of your existing job or career, and uh, you do not have to trust in your investment advisor or your pension fund or uh, your buy and hold on for dear life strategies to hopefully yield a passive income stream that's worth its salt. You can take this into your own hands and you can actually uh, create a solid income stream that is reliable based on this concept of trading over investing. Okay, so we'll see you on the next one. Thanks for tuning in and look forward to chatting with you then.